A look back at the week. Well, China's first quarter growth data topped off a positive week for that economy and global markets. This followed news that China's exports for March rose 11.5% year on year. That compared to a mere expectation of 2.5%, a rise, of course. Well, news out of this economy and a weaker US dollar spurred global markets this week into positive territory, with commodity prices rising and resource stocks surging ahead.
Dollar weakness at the start of the week saw global investors' demand for commodities rise. Prices rose as a result and immediately had the effect of lifting emerging market currencies. In turn, global stock exchanges took heart as investors adopted a risk-on mindset. Brent crude oil remained firmly above $40 a barrel. Views remain mixed as to whether a plan by oil producers to fix output at a certain level will help to ensure prices don't fall substantially from where they are now. OPEC producers, Russia and South American oil producers meet in Doha, Qatar this weekend to determine output. Trade data out of China lifted global markets further, generating optimism that the slowdown in that economy may not be as bad as anticipated. Then today, China's GDP rose in line with expectations. Analysts say that the latest number indicates that growth in that economy is stabilizing. But there are concerns about the propensity for inflation to rise, curbing room for the People's Bank of China to inject more stimulus in that economy, which may explain why Chinese markets sold off their 3-month gains registered yesterday at the close of market today. Locally, retail sales for February surprised on the upside, rising by 4.1% year on year. That's against an expectation of 2.6%. While commodity prices surged ahead, the reality of real fundamentals of the economy were laid bare. This as mining production data for February showed a decline in production by 8.7%. Many mining houses in South Africa and across the world continue to struggle to break even, with the consequence of thousands of jobs being lost in the sector.